whether or not the correction is overdone, and if so, what is it that you should be doing as an investor? We've got on board with us Raunak Onkar, the research head at Parag Parikh Mutual Fund, joining in the studio right here. Raunak, hi, morning. Was it scary what happened in the last 2 weeks, or were there signs, considering you watch global markets also closely and have a large portfolio invested in there? Could you see it coming?
Hey, thanks for having me here. Actually, it wasn't scary as such because we have been seeing valuations being at a stretch over both markets globally as well as in our domestic market. So we haven't been able to deploy money as easily as in the past. So it's a bit of a relief where we could at least add some more to our original existing ideas where we have some conviction. And we will see the valuations correcting. If at all they are good enough to buy more, we will, and probably just keep waiting and watching. You know, right now we still have about 20% of the portfolio in cash.
So you think there is a bigger fall in the pipeline then?
Maybe, maybe not, but it's better not to just put money behind expensive ideas.
Okay, so let's talk about some of the expensive ideas that you've been searching. Not Apple, which you already exited out of, but some of the other global names. What is it that you've done in the recent fall? Have you bought more of the same, or are you still waiting on the sidelines for perhaps a better opportunity?
So in some cases we added a little bit. The recent addition we had in the portfolio was Suzuki Motor Corp, which is the parent company of Maruti Suzuki India Limited, and where we get a chance to even participate in the two-wheeler segment of Suzuki, at the same time the global business of Suzuki, and about 2/3 of their profits at consolidation are from the Indian subsidiary, and they also get the royalties.
You know, it's interesting that you bought Apple less than a year ago, and you've exited Apple before that. Isn't that against the basic grain of what you do? On your website, the basic message is that if you're a genuine long-term investor, come to us. Your portfolio rarely changes, but you bought world's largest company and you've exited it before a year.
It's fair to say that it's out of tune to what we think, but the idea behind Apple was to buy because there was no growth priced into the stock. The valuations were really at the bottom of what they had seen, and if it rapidly moves up and people suddenly start pricing in the growth, where our view was never about the growth in the company, we were just excited about the amount of cash they had on the balance sheet and the strong product positions that they had in several segments, and we thought that was priced in after a point, and doesn't really make sense to hold on to something where we believe has become a little expensive.
Okay. Locally, what are you buying? What has, as per your last declared portfolio, I'm afraid I don't have it with me right now, so I can't officially talk from that. What are the changes you've made?
We've added Suzuki Motor Corp, like I was talking with Aisha just now. So we get a chance to own a chunk of the Maruti Suzuki India Limited profits, plus we get the royalty from the local Indian company. Plus, we also get a chance to participate in the global business of Suzuki Motor, the assets that they have invested in India as well as other markets, and the two-wheeler business of Suzuki, which is a little small right now.
Okay, so aside of Suzuki, what about some of the domestic names that you've been holding? What is it that the strategy has been there? Have you also bought more of the same in the current dip, or are you still on the sidelines?
So we have bought more of the same. Companies like pharma companies and IT companies which we own, we have added a little bit to them. So that's about it at this point in time in terms of addition.
Any newer avenues that you may be looking at in the current fall? Any outcome, anything out of the budget which has got your interest in terms of an investment theme that you think could be, lucrative going forward?
So budget actually happens every year, and since we look out for 5-year holding periods, it actually doesn't make sense to change strategies or tactically allocate money based on the budget. So budget does give opportunities in terms of expressing where the government is taking the economy and what their plans are. But over a period of time, if your portfolio is aligned to the longer term trends, I think it's okay to just sit on what you already have and buy more if the valuations seem reasonable.
So what's looking interesting in this market? Anything new that you may be researching aside of the budget right now? Anything that is on your watch list where you feel that another 10-15% correction and that's going to be a buy? You don't have to name it, you could just highlight the sector.
So what's interesting about the strategy that we have is it's more important to keep watching what you already own and what are the competitive problems that they can face going ahead. So for example, if your industry, if your company you're owning is in an industry where Amazon is competing heavily, I'm pretty sure you really have to refocus your attention and figure out if it's still worthwhile to stay invested, because it's a bad idea to compete with somebody who has unlimited amount of cash.
Who's the best in the business,
and they have the longer term horizon anyway. So You have to keep watching your portfolio very carefully, find out if the businesses are still competitive, if the management is still aligned to what they had said in the past about the business and the growth, and are the valuations still reasonable. I think that takes up a lot of effort to really understand the dynamics there. Plus, we keep researching newer areas, and right now, if everything we add is going to be in the portfolio anyway, so I'll rather wait for the portfolio announcement to happen if at all something is going to be added there.
But Raunak, 20% cash is very unusual. Fund managers normally have 5-6% cash. The mandate is not to sit on cash. Now, 20% cash means either you don't want to buy more ideas, or you are looking for a new idea where you could, allocate large amount of capital, or you're bearish on the market. So 20% cash is something normally funds don't run.
Yeah, it is fair to say that, but it's also important to not chase valuations when you know that they are clearly stretched. That's one thing. Secondly, the cash also helps if there are some shorter term redemptions that happen. So it helps you take care of that without having to touch your portfolio of stocks that you already own. I really understand that the money is not given for keeping in cash, but also not given to chase valuations at any given price.
Exited any of your local holdings, you've exited Apple, so that should not be a problem for you to exit Apple because it's a liquid stock. But anything from the mid cap space which you've cleaned up from your portfolio, because that's where the heat is.
So we have not cleaned up aggressively. We have been selling some parts of some of the stocks which have seen run up in valuation in terms of their historical trends. So those we keep paring down. So you will see the percentage holding of that stock being reduced over a period of time in the fact sheet. But apart from that, we have also added the same cash being used somewhere else immediately to buy some of our existing holdings where we thought the valuations are still reasonable to continue to own them.
I'm just going through what exactly is the nature of your portfolio right now, and I remember the positive call on Mahindra scooters. Does that continue to remain, because you were extremely bullish on this holding company structure that Mahindra Scooters has?
Maharashtra Scooters.
Maharashtra Scooters, I beg your pardon. Yeah, I've got M&M's numbers in my head. Sorry, yeah.
So Maharashtra Scooters holding structure, we shifted some of that to Bajaj Holdings, which has more exposure to the auto business and little bit less to the financial part of Bajaj's group. So we still are comfortable with owning holding companies. We think that the valuations should match up to the holding value because of the updates to the Companies Act, where the promoters and related parties cannot vote in special resolutions which are related to capital allocation, and the minority shareholders get a bigger say in that. So I think some rationality has to prevail over the valuation gap that exists between the holding companies vis-a-vis the price of the holding company.
What about some of the other investments like Noida Toll Bridge? And I remember there was quite a bit of hue and cry when there were the news reports on Noida Toll Bridge. Does that continue to be part of your portfolio, or is that out?
So we sold Noida a while back when the announcement came from the High Court that they were not allowed to charge any toll.
Yes.
And as you see, the numbers in the company continue to deteriorate because there's no revenue collection as such.
Exactly.
One thing that we learned from that was not to mess with businesses where there's a lot of public outrage that can come in because of some or the other political motivation there. So it's really something that we learned over there, when if you're going against the public in terms of charging something more for something. And you can see the outrage in pharma companies in the US as well, where every pricing decline is happening and everything is affecting even Indian companies right now. The moment you go against that kind of a sentiment, it's very difficult to know how the business outcome is going to be. And the moment we saw that the business outcome has changed, we decided to get out of that idea.
When you talk about your exposure to IT, are there domestic names as well that you own?
Yeah, so in domestic segment, we own Persistent Systems, which is our biggest position in the IT segment. Secondly, it is Emphasis Limited, which is another segment, another company we're owning for a while.
Why Emphasis?
So Emphasis in the past, when we had bought, had a good base business from the HP company, which was a parent of Emphasis, and they were growing strongly on the non-HP side as well. Incidentally, so happened that HP started declining, which was unfortunate for the company. Over a period of 3 years, they really saw a revenue decline or flat revenue for a long time, where the non-HP business continued to grow. Now a strong partner in the form of Blackstone has come in, who acquired HP Global's stake in Emphasis. And I think being a private equity investor, there is a slightly more focus on better capital allocation. And Emphasis always had very strong cash flows and good cash on the balance sheet. Even right now, I think sixth of the market cap is in cash right now. So they had that kind of a cash focus, and the management team has been changed to realign their business to the Blackstone idea of how that business should be run. So we'll have to wait and watch how the outcomes come out, but the trajectory of that business seems to be good so far.
Okay, Raunak, great speaking with you. Thanks
Aisha.
much.
Thanks
And
for
we're
having me.
going to talk again if you do happen to add anything more to your portfolio. That's the view then from Parag Parikh Mutual Fund.